afternoon. Welcome to the Commodity Buzz. The last week was all about G20 meet and the possible outcomes surrounding the G20 meet. The meet has finally ended and no major outcome from the meet, I would say, has come out. The status quo still remains the same. However, the date it has been pushed forward for any kind of amicable settlement or discussion over the trade talks. President Trump has taken a back step where he's agreed to not impose any tariffs on China in the near future, and China has also gone ahead and committed on buying a few agri commodities which they've been buying from US for some time more now. But however, that has not impressed the commodity complex much. Gold prices, which went on to hit a 6-year high at the start of last week, are now cooling off and are trading below $1,400 after hitting a high of $1,440. Most of the fundamentals remain the same except for the G20 meet, which had a risk premium built into the prices. We continue to maintain a positive stance in gold. We've seen other factors remaining very stable, and we treat this opportunity or this dip as an opportunity to buy for the short to medium term once again. We expect that any dip towards 1360, 1365 or any dip towards 33,400, 500 on the MCX could be used as an opportunity to buy once again for a 3 to 5% upside in the coming days. Crude oil prices have been surprising and have been trading at multi-month high closer to $60 for the WTI. We are sitting on the OPEC and non-OPEC committee meet over the next couple of days, and that is likely to be the next short-term driver of the crude oil prices. We believe that Saudi Arabia, Iraq and Russia are backing a treaty to sign another production cut for around 6 to 9 months, and whereas US production continued to hit a lifetime high once again. So in a way, a couple of things are offsetting each other, but still prices are likely to stay firm as the trend continues, and any closure above $60 for the WTI is likely to push prices further immediately towards 63.5, 65 levels in the coming days. So we continue to maintain a positive stance, and a lot of it will depend on the OPEC outcome over the next couple of days. On the base metal front, we've seen that base metals have been consolidating with a positive bias over the last couple of weeks, and the G20 outcome did not impress the market much. Whereas we believe that select metals are likely to outperform in the coming days. Copper is one metal where the focus has been and will be in the near term, where inventories have been dwindling, as well as we have seen that a strong technical base is formed around 5,800, 5,900 levels, and any meaningful upside from here, if starts, could push the metal towards 6250, 6300 levels. A lot will depend on the PMI numbers which are scheduled over the next couple of days. If these numbers impress and market is confident that growth is once again coming back on track, then copper is the best bet amongst the metal space. So we advise any dips could be used as opportunity for the short to medium term perspective. Thank you.